It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
Welcome back, everybody. I'm Larry Kudlow. This is the Larry Kudlow Show. Great to be with you, as always. By the way, you can live stream us on the internet, LarryKudlowShow.com, LarryKudlowShow.com. You can hear us all across the country, around the world, throughout the solar system, including the Milky Way. And please join us during the week. Fox Business Network, FBN, name of the show's Kudlow, 4 to 5 p.m. every day, Monday through Friday. And if for some reason you can't get us at 4, why just text your favorite 9-year-old, and she will show you how to DVR the show. All right, let's do some stock market work writ large. We have Jim LaCamp, Senior VP Investments at Morgan Stanley, and Jim Iuorio, Director of TJM Institutional Services and Chicago's leading restaurateur. Gentlemen, welcome back. I want to talk about whether America is going bankrupt, okay? Not America, I shouldn't say that. Whether the federal government is going bankrupt, okay? I want to get you guys' take on this. You got new CBO, Congressional Budget Office numbers, came out this week. They're an outrage. Okay? Spending is 25% of GDP, up 4 percentage points from the 50-year average. Revenues are doing fine. It's all about spending. Deficits, $2 trillion as far as the eye can see every year. This is the CBO, okay? This is current law. Budgets, the deficits, the debt is going to probably hit, listen to this, is unbelievable. But at the end of the 10-year window, you're going to have $50 trillion in federal debt, which is 122% of GDP. Okay, it's an outrage. This is like a third world country. This is like Brazil, Argentina, I don't know, whatever else, your worst country. And the markets don't seem to care one whit about that. Meanwhile, the Treasury Department, which has to sell all these bonds, $2 trillion worth, as far as the eye can see, they're selling them all in the 91-day bill market, which is sheer insanity. But meanwhile, people going along, the stock market's fine and the bond market's fine, and nobody seems to care. So I want to begin with you, Jim Iuorio. America's going bankrupt, and this cannot continue forever. Something's going to break. I don't know when. I don't know how. I'm not smart enough to know. But I want you guys to weigh in on that. You first, Mr. Iuorio.
Well, this is going to be the shortest interview of all time. So the question is, are we spending ourselves into bankruptcy? The answer is just a flat yes. And anyone who wants to take the other side of that is going to lose in a fiery crash in this debate. It's ridiculous. I posted a chart yesterday of the cost of debt service and how it's just gone absolutely vertical. So this is MMT. We never agreed that MMT was the right way to go, and they decided to do it anyway. This is absurd. And by the way, it's like this thing happens with government. It's like, well, if the last guy got to spend as much as he wants, then I do too. And every new politician that gets in thinks the same way. They think it's some sort of birthright that they can spend. It's an average of federal government employees. They average spending $13 billion per federal employee. I think that's what Brian Westbury put out. It must be above some certain level of what, because that sounds pretty ridiculous, but it's absurd, the number is. So it's going to be the third biggest line item in our budget now. And once it's past the point of no return, once we have to start spending exorbitant amounts just to cover the debt service on the amounts we spent before, then it gets then the wave has crested. That is one of the main reasons I am long things like gold, Bitcoin, copper. You mentioned the stock market, by the way, too. And I don't think the stock market is necessarily flashing a counter signal to profligate, irresponsible spending. I think one of the things we're saying is we got to get our dollars into something else. If you just hold the dollars, they're going to lose a precipitous amount of value.
Well, so yeah, all right. So there you have it. By the way, MMT is modern monetary theory. Right. Is that what you're referring to?
Exactly. Modern monetary theory, and it's the most ludicrous thing you've ever heard. Basically means you can spend yourself into the crazy amounts, and if you see inflation, you raise taxes real quick. One, they can't see inflation. Two, they'd never raise taxes real quick, depending where they are in an election cycle. So the whole thing is malarkey, to quote our really hip president.
All right. So, Jim LaCamp, I want you to come in on this. I'm looking at the bond market. All right. So the 3-month T-bill still, it's up 536 because the Fed funds rate, the Fed's holding the funds rate at 5.25, 5.5, higher for longer, which I think is an appropriate policy. But the other, you go down the curve, the 10-year is 4.25. I mean, they're selling an unbelievable amount of paper. Now, there's financing it short, but at some point they can't keep doing that. You just can't keep rolling over. And somebody made the point, it might have been Steve Forbes actually, that selling all those bonds short and keeping that interest rate high, short, that's small businesses tend to borrow at the short end of the curve also, which is, so there's a crowding out going on, and small business economy is not doing well. But I'm surprised that more of the market gurus, the advisors and so forth, the strategists aren't concerned about this dismal budget outlook and the blow up of our federal finances.
It's really interesting because, so first of all, it is impacting the economy. The GDP is 1.3%, and let's not forget that government spending, which is running amok, is part of that 1.3%. So the GDP is really not taking off with all this government spending. In fact, we have a negative multiplier. The last $1 trillion of growth that we had in the U.S. economy cost us $1.5 trillion. Government is now the single largest employer in America, and the jobs being created are part-time jobs. And yes, the stock market averages are doing well, but the average stock is not doing well. When you look at an equal-weighted S&P 500, you're not seeing a booming stock market, and you're not seeing booming earnings once you separate out those small areas of growth that are carrying the ball, artificial intelligence, some of the resources, et cetera. Outside of that, corporate earnings have been rather mundane. So we're getting into a soggy, muddy economy, which is what you get when you overspend and your tax revenues go to debt service. They don't get into the economy. It's a morass. And like you said, once you get that genie too far out of the bottle, it's really, like Jim said, I guess, it's really difficult to rein that in. And Trump's not going to rein it in. We know Biden's not going to rein it in. And so this is something we're going to have to deal with for a long time. But here's the other problem. Japanese bank failure, they're selling $63 billion worth of treasuries. That's not going to help the market. And you have this maneuver that the Biden administration did by seizing the Russian assets and selling off their treasury. Now, once the world understands that you can't use U.S. treasuries as collateral, they're going to be using less treasuries as collateral, and the demand for treasuries is going to be diminished.
Well, wait a minute. That one, hold on. That's you're talking about the proposal. This is the Russian central bank. The U.S. has control of $5 billion. So they haven't even made that decision. They may put that to the Ukraine military or some such, give the money to Ukraine. But that's all it is. But that's Russian. That's Russian
had those deposits. Those were U.S. treasuries being used as collateral, and our other governments.
Oh, I see what you're saying. Right.
Yeah, other governments going to be concerned about using treasuries for collateral if the U.S. government can go seize those and sell them off.
When you said, can I get let me see, the S&P 500 year-to-date, very handsome, 14.6%.
Yes.
But you're saying equal weighted. Now, I've seen reference to this before. What's the performance of the equal weight?
About 3%.
Oh, okay. I got you.
And by the way, inflation is 3.3%.
Yeah, so you're behind. No, that's a great point. That's a really important point.
And look at small caps. They have not, Wall Street gets into this mean reversion stuff. Buy value because it's underperformed. Buy small caps because they're underperformed. Buy Europe because it's underperformed. We've been waiting on that BS for 10 years. It hadn't happened. But it also goes to show that the economy is not booming because these small companies don't have the earnings.
So that's interesting, too. We'll get Iuorio back in. let's see, the Russell 2000 small cap proxy minus 0.2% year to date. The S&P 600 small cap proxy, right? Am I right about this?
Mm-hmm.
Minus 2.8. So you're quite right about it. So yeah, you're spot on in the numbers. Jim Iuorio, what do you make of that? And I want to ask you, do you think that the rally in gold, let me just look at the gold. The gold story, gold's up 12.5% year to date, 23.21. It's off its highs, I get that. But gold's done. Is that part of this, federal bankruptcy threat?
So for the gold trade first, which, by the way, I can't believe it's 15 minutes into the conversation. We haven't mentioned NVIDIA yet. We've danced around a little bit. Let's get to that in a second. The gold trade, to me, like for the previous, call it 5 years, it seemed like the range was 1,800 to 2,000. It just bounced in between. Now, I think 2250 to 2550 is just reflecting a reval of the dollar. The dollar is worth 70% of what it was before, and everything should really be adjusting up, and gold's one of the preferred assets. Now you throw in the fact that central banks, up until a month ago, particularly China, central banks were adding gold positions at a rate they haven't done in 75 years.
Right.
That goes back to what Jim said about if we are the arbiter of the world's finances, there is blowback if we just freeze up all of Russian assets a couple of years ago, and maybe it does create some mistrust among central banks. I'm not a de-dollarization guy, but I believe if enough other people believe in the de-dollarization theory, that could fuel those assets like gold and silver quite well, and real estate. As far as the stock market thing goes, I think the enormous elephant in the room is NVIDIA has just done so much of the heavy lifting, and NVIDIA and about 5 other stocks as well. We've never been so top heavy. I think we've been once in history is top heavy with the top 7 stocks. Now, the biggest elephant in the room is NVIDIA just this week had an outside day down and then a trade lower, which is one very strong signal of a pullback coming. Not coincidentally, the entire S&P had the same technical pattern, an outside day down and then weakness the next day. So that, to me, signals that it's like a 60 to 70% chance that the correction is among us. And all we have to do is watch NVIDIA, because that's the dog. I mean, that's the leash, whatever the metaphor was going to be, it was going to be an awesome one. But that's what I'm watching. Dog
chasing its own tail. I'm trying to figure out the metaphor here.
Pretend I said it.
Dog chasing tail. I don't know. Let sleeping dogs lie. I'm not sure. Listeners can text me in if you have a better metaphor. I got to take a break. So you got NVIDIA in there. Nice going.
Thank you.
All right. But NVIDIA is not going bankrupt. It's the federal government that's going bankrupt. And that's the part that really concerns me. All right. We're going to take a quick break. Well, that was a rough beginning. Anyway, Jim LaCamp, Senior VP at Morgan Stanley, Jim Iuorio, TJM Institutional Services. I'm Kudlow, and I'm just telling you, we're going bankrupt. It worries me. We'll be right back.
This is the Larry Kudlow Show. Now, back to the Larry Kudlow Show.
This segment of the Larry Kudlow Show is sponsored by Priority Gold. All right, we're proud to have them as a sponsor. Anyway, we're talking stocks, more or less, with Jim LaCamp, Senior VP Investments at Morgan Stanley, and Jim Iuorio, Director of TJM Institutional Services, Chicago's premier restaurateur. I got one more for you guys. There's a big essay in today's Wall Street Journal by Jerry Seib, old friend. It's titled, Will Debt Sink the American Empire? It's a long essay. Will debt sink the American empire? After growing for decades, this year the U.S. debt will roughly match its GDP. Throughout history, nations that blithely piled up their obligations have eventually met unhappy ends. And I'll read you a money quote from another friend of mine, Neil Ferguson. Historian Neil Ferguson recently invoked what he calls his own personal law of history. Any great power that spends more on debt service, interest payments on the national debt, than on defense will not stay great for very long. All right? Now, I don't want to be an alarmist. I'm just saying these numbers are very bad. Very, very bad. All right? Maybe we've done on them what we can do on them, but golly gee whiz, at some point, it's going to hurt the dollar. It's going to hurt stocks. It's going to hurt bonds. It's going to hurt America's standing in the world. Jim Iuorio, apropos of nothing, give me 25 seconds. How's your restaurant business doing? I use you as a leading indicator.
Right. So our costs in the last 3 years are probably up 50%.
Oof.
We've raised our prices 20%.
Whoa.
And it's not just, people think it's just goods inflation that's going through the roof, and it's not. It's, in these, what color are the Democrats again? The blue. The blue states, like Illinois, they increased minimum wage ridiculous. Minimum wage is mostly just a training program for high school kids, and we can barely even do that anymore because they're not worth $15 an hour, even though I love them. So the restaurant is very, very difficult to make money. We've decided to not make as much money personally in the short term and just to see how this plays out over the next 5 years. Our theory is, and this is not what I want to happen, but I believe tons of independent restaurants are going to go out of business. It's 55% of independent mom-and-pop restaurants are delinquent on their loans right now, which is the highest number
really?
I believe in decades. And so it's a very, very difficult time for restaurants. We're doing okay, which is down from doing great 2 years ago.
Wow. Well, I'm glad you're okay, but
thank you.
Part of that report is not cool. Jim LaCamp, just give me 30 seconds. What are you buying and selling here? What's your strategy?
So historically, when you have a good first half, you have a good second half, but we are very, very narrow. And I would look for a sell-off between late August and early October, and I will continue to buy artificial intelligence on corrections, not here, but on corrections, just because that's where the earnings power is. I also like energy for the long run, but you have to use a lot of timing when you buy energy stocks. They're very up and down. And the travel-related stocks have done well, but right now, Larry, we're keeping our cards pretty close to the vest. We're not. We don't think it's a good time to be adding a lot of risk. The market is extremely overbought, which means 2 standard deviations above the 50-day moving average. Not usually a good place to add.
Jim Iuorio, quick 30 seconds on the interest rate markets, bond markets.
So something that's my base case right now is, remember back on May 1st when the Fed decided that they weren't going to sell $35 billion a month and they weren't going to sell $25 billion a month. I thought that was a big tell because I think they don't want to sell alongside the Treasury. Now, several of the longer-term auctions have gone okay in the last 2 weeks, but over the last 6 months, at least half of the longer-term auctions have been bad. Here's what I think is going to happen. I think the Treasury is going to keep spending like drunken sailors, the government is, and it's going to push bond prices down, rates up on the long term. Then eventually the Fed's going to come back in, start buying bonds again. That's when my trade really starts to accelerate.
Jim LaCamp and Jim Iuorio, thank you, gentlemen. Money Politics up next with Liz Peek and Steve Moore.
Long Island is more exciting than ever at Jake's 58 Casino Hotel. Get ready to zoom into some serious cash with Zoom Ball every Wednesday in June. Win up to $500,000. 1 point equals 1 entry. 2 lucky winners will be drawn at the top of every hour from 1 to 5 p.m. to play Zoom Ball. Discover the excitement at Jake's 58 Casino Hotel.
If gambling is a problem for you or someone, please call the 24-hour toll-free helpline at 877-8-HOPE or text NY.